Now, of when the prices, if you want to sell and the price goes down. Remember I said, interest rates in treasury bonds change every single day. Actually, this is a clear interest rates. In Uganda, our world market, capital markets, is not so much prone to information change. But in global markets, rates change even every 2 hours, every hour. So, what this means, and people talk about this in a way that is sometimes short-sighted. I might say, especially people who want to say, but bonds, go slow on bonds. If you buy a bond at a times when interest rates are low, and tomorrow interest rates go up, it means the price of that bond goes down. The challenge, if at that point you want to sell that bond, you will sell it at a loss. And that is a bad thing, because you bought your bond right now in 2026 at 1 million. You want to sell it in 2027 when interest rates have gone up. And they are paying you 900k, so you're going to make a loss of 100k. But it has paid year coupons, like 2 or 3 coupons. So that is the risk. That's the theoretical part. So the question becomes, what is the practical part? The practical part is this. If you look at the last 15 years, there has been more years where interest rates are going down than when interest rates are going up. Actually, let's look at it. Let me use 10 years. Interest rates were up in 2015, 2016 because of the election of 2016. After that, interest rates were down in 2017, 2018, 2019, 2020, 2021. Not even the election of 2021 because it was a COVID year. Interest rates went up in 2022 for a brief period because of the war in Ukraine. Interest rates started falling down aggressively after like 3 months. In 2023, they were down. 2024, they were down. They picked up in 2025. After the election in 2025, rates are down. What does it mean? Rates are going to be down potentially in the next 3-4 years. Out of 10 years, you have 3 years where interest rates were down, which means you could sell your bond at a loss. The other 7 years, you had 3 years where interest rates were up, which means you could sell your bond at a loss. The other 7 years, interest rates were coming down, which means you could sell your bond at a higher value. So what is the risk? It's an opportunity. Last year, when I started aggressively talking about treasury bonds on TikTok especially, I told people buy bonds. These rates are going to go. The 17%, they are gone. Whoever bought a bond in 2025, right now, they are selling it at a higher price if they are to sell it. They are getting more money. And it's going to be like this year, next year, 2028, 2029, potentially until 2030. Or if maybe a major event happens here and somehow pushes our interest rates up. But one thing, why am I bringing it that way? That on a longer period of time, 10 years, 15 years, there are fewer years where interest rates are up than when interest rates are down. So it's a risk. It's a risk that has more opportunities than the risk itself. So if someone is saying, I'm buying a long-term bond, but what happens when I want to sell it? I'm like, yes. One day you might wake up when you want to sell that bond when the interest rate is up and you sell it at a loss. But you have more probability, more opportunities where interest rates will be down and you sell it at a profit. And the people who bought bonds in 2025 are seeing it right now.